Good afternoon, colleagues. In this video, we're going to discuss the presentation of financial statements. We will basically focus on International Accounting Standard 1, presentation of financial statements. International Accounting Standard 1, presentation of financial statements. Alright? Now, International Accounting Standard 1 is the oldest international accounting standard. It does have its requirements in terms of how we're supposed to present financial statements, which can be used by decision makers for making decisions, right? We do have different presentations of financial statements which are recommended by IS 1. So financial statements can be presented for internal use, right? So financial statements presented for internal use, they are not very much regulated because they are not published. So we may write them the way we feel is best for us. But then there are some basic requirements in the presentation of each set of financial statements. But financial statements for publication, they have to conform to the requirements of publication, right? So let's first discuss the internal use financial statements. What do they compose of, right? So basically, your financial statements should meet the following requirements. You should prepare a statement of comprehensive income, which we sometimes call the income statement or the profit and loss account. So sometimes when you're reading an old textbook, you find profit and loss account. Sometimes you may find income statement is basically one and the same thing, which is the statement of comprehensive income, right? This is the first thing to prepare. You're also going to prepare a statement of changes in equity. Your statement of changes in equity is showing your share capital and your reserves. How have they moved from the beginning of the year to the reporting period? That's your statement of changes in equity. Not a very much complicated statement, right? Then you prepare your statement of financial position. This was known as a balance sheet long back. In some textbook, they still write balance sheet, some of the books. Right? It's still the same thing. Number 4 is your statement of cash flows. Some textbooks, they still say cash flow statement is still one and the same thing, right? So in this lesson, let's discuss the statement of comprehensive income. Then the following lessons business, we're going to discuss the other parts of the financial statements. Right? Let's discuss the statement of comprehensive income. Statement of comprehensive income. We say this is also the same thing as your income statement. So basically, this statement is showing the business how much profit has the business made, right? So we are starting with our revenue. This is the amount of money that you have received in the business, whether cash or on credit, right? We put our figure there. Let's have an example. Let's say this is 2 million, right? In order for you to earn revenue in any business, if you are trading, you're basically selling goods, right? So you have to reduce your cost of sales. Let's say 500,000. The difference between your cost of sales and your revenue is your gross profit. This is your profit that you've made in the business. But from this profit, we haven't deducted all the expenses that the business has incurred in order for us to know how much remains in the business as the profit of the owners of the business. So we still have to deduct our operating costs. So what goes into our operating expenses? These are expenses which you are incurring on a day-to-day basis in order for us to be able to earn a profit. Let's have examples of them. Advertising. Consulting fees. Accounting fees. Audit fees. Rent. Electricity and water. Wages and salaries. Depreciation. Stationery and printing. Right? So for simplicity's sake, let's assume these are all the expenses that we have incurred in the business. Let's add up all these expenses together. That's 5, 10, 15, 20, 30, 40, 50, 60, 70, 100. Right? If we deduct our gross profit, we deduct operating expenses, we are going to get our net profit before tax. So that's 1.5 minus 100 gives us 1.4, right? But tell you what, a business that makes a profit has to pay income tax. So we have to deduct our tax, we have to deduct our tax expense. We have to deduct our income tax expense, 400, let's just assume it's 400, right? Then our net profit after tax, our net profit after tax is equal to 1,000. Right? So this is the net profit that the business has made. Right? If you are the owner of this business, then you know that my business has generated a profit of $1,000. But in this case, because we've got three zeros there, this profit is $1 million. Right? So basically, this is your income statement or your statement of comprehensive income for internal use. Right? When you're preparing an income statement for publication, this income statement is going to be a little bit different from this income statement. This is very simple. We also haven't assumed that you are paying interest, so you don't have finance charges. If you have finance charges, then you're still going to deduct your finance cost to get your net profit after interest and tax. Okay, guys. I'm hopeful that this video is going to become very useful to you in terms of understanding a basic income statement which is not meant for publication. And in our next lesson, we'll focus on an income statement that is meant for publication, then it's going to have to conform to those particular requirements for publication. Thank you very much for watching.